something that's worth noting for future reference, and that I've been kicking myself over, is that it should have been obvious to me that the market would dip today and that I should have bought put options on Monday, because tomorrow is when the Federal Reserve announces their next interest rate hike decisions, and 3 or 4 of the last 5 times this has happened, the market has dipped the day before the announcement out of anticipatory fear. It technically would have been gambling to short the market Monday, expecting it to dip today, but it obviously would have worked out, and there was about an 80% chance of success based on how things have been lately. While I would not suggest that the economical data this year has been good, it has been improving. Things are better now than they were recently. Nonetheless, fear is dominating the market. That's why Sophie tanked after good earnings. That's why Ford dipped after beating earnings expectations by about 50%. And that's why AMD dropped after reporting earnings that beat expectations, despite the fact it's very undervalued and usually runs around this time. Unfortunately, with all the great stocks that have earnings soon or this month, many of which usually or often run around their earnings, sadly, the fearful market conditions may prevent them from doing as well as usual. At the very least, this is yet another great opportunity to buy a ton of great stocks at support or their bottom. Obviously, there will eventually be bouncing. There could even be a bounce tomorrow based on what they say. It just depends. But eventually there will be fluctuations, swings, and ultimately a great recovery whenever the next bull market occurs. So buying as many stocks as possible, averaging down when necessary, reserving some buying power, or continuing to transfer new capital in whenever possible continues to be the ultimate approach during these times, just like every other bear market in history, pretty much.